guys, welcome to your mortgage rate forecast for June 28th. Let's get started with the news. Here's what we have. Bonds are slightly down today at about 101.89. Today's reports were actually not too noteworthy. GDP came in as expected, and the initial jobless claims was really kind of a miss. But yesterday was actually a pretty darn good day for bonds. Pending home sales and durable orders both missed their mark. We are starting to see us lose some of those gains from yesterday, but yesterday what I would say was the most noteworthy day over the last 2 weeks since my last recording, because the bonds have been trading relatively flat. So to kind of show you that, let's get over to the charts. Here's what we have. You can see nothing too crazy on the market. We got out of this downward trading channel that we saw in early June. And since then, we've kind of flattened off and saw some slight improvement. We are going up on the technicals here, guys. We are going up and touching two resistance levels above us. So it's going to take quite a bit of news for us to actually economic news, that is, for us to actually break above those levels. So analysts right now are really pretty neutral on the whole subject. To kind of show you where Freddie Mac came in at, Freddie reported in May a 4.59 rate of 0.4 points. All that sources to that data is down below. But that's when bonds were trading about 101.80. They are slightly up from there. However, we are noticing across the board, Freddie's charts have been off. So I've been using a new source, the MBA survey, and the MBA survey is showing that the rates have been pretty flat, pretty consistent over the last 3 weeks, which is consistent with the charts. So that's kind of nice to see. And the MBA survey said average consumer is receiving a 4.84% interest rate right now on a 30-year fixed. So I think this is more realistic with market. As far as the forecast, my last forecast, I was a miss by 14 cents. The bonds actually beat my expectations. Sorry about that, guys. And moving forward, I think analysts are saying, hey, we're kind of neutral, maybe cautiously bullish. Other analysts are a little bit bearish in the long term because the government is going to be turning up the quantitative easing here next week for the month of June. So we're going to see more pulling back of bond purchasing by the government. So I mean, it's just kind of a mixed bag of news. But I believe trading is going to probably hit between 102.25 and 101.25, and our current trading is at 101.89. Now, of course, it's hard to project 2 weeks out in the market when there's going to be so much news coming out. But looking at the technicals, I really do think we're going to see more of a push downward than upward. Of course, anything's possible. So I think we have more room to actually get worse than better. That is my take on it. So if you're floating right now, I would say cautiously float. You may be able to pick up some short-term gains, but I think you will lose a little bit as we approach June or latter June if you continue to float, unless there's some crazy bond-friendly good reports that come out in the meantime. So that's it for now, guys. We'd love to hear your comments. Leave those comments down below. Hit that like button before you go. And if it's your first time on the channel, if you hit the subscribe button, you'll just get a quick notification when we release new content. And if none of this made sense to you, it's okay. Over at the top right, that's going to get you to Mortgage Bonds 101. That'll teach you the basics that you need to know when you're trying to figure out the best time to lock in your mortgage rate. So anyway, we'll see you in a couple weeks. Take care, and we'll be looking for your comments. Bye-bye.